crypto as well. So what is the macro driver of crypto? Well, inflation doesn't help because it's taking money from your pocketbook and not allowing you to allocate money into crypto because it's a retail-driven market. It also creates a lack of liquidity because the Federal Reserve, to stop the inflation, have been taking liquidity out of the system. So that means institutions and hedge funds have less liquidity to put into the system and therefore less flows into risk assets like crypto. I found the best approximation to be money supply growth, M2, year on year. And year on year M2 looks like it's potentially turning up global M2. We're already seeing that China is going to start picking up M2. We're already seeing that Europe is going to start stimulating through the back door, which is they're going to have to offset the electricity prices, the difference between electricity and gas prices. And they're also giving direct transfer payments to people to pay their electricity bills. So I think that monetary policy changes. It also lags ISM. It's kind of a weird thing. And it tells me that M2 bottoms right about now, which is what the crypto markets, I think, have been telling us. They're trying to find this bottoming process. And if I'm right, the economy slows down, liquidity is going to come up, and crypto is going to rally from here. Let's see. But again, I think crypto is put in a low. I think the ETH Merge is a very big deal.
Yeah.
I think it's going to drive inflows. Yes, there'll be volatility. Yes, it won't be a straight line. But I think over time, it's going to put some security into the space because it's done and out of the way. Let's see. Let's hope there's no risk around this. It'll die some of the FUD narratives that are currently building as we move into this, which is only normal and people should question it. And then we'll see on the other side, when you've got this yielding asset that is a giant in the space, what that unlocks in terms of DeFi, the opportunities for institutions to invest, and other opportunities that come from a different asset. Also, the ESG credentials. You know, we all know that Bitcoin ESG credentials are not what the ECB or others will tell you, but that's the narrative that's won the institutions now, that Bitcoin bad, but proof of stake, good. So I think all at the margin, it helps people allocate.
What does Raoul think about where stocks are headed?
It pains me to say it because it doesn't feel like it and everybody calls me an idiot. I think they're going higher. Now, I don't really have that bet on. So it's my hunch, not my bet.
Raoul, here are two questions, one from Yaron and Peho Kelon. I'm going to aggregate these together. Both are interested in understanding what's happening right now in the housing market, obviously something that's been greatly discussed the last few months. What's your take there?
I've been talking about this for a long time. Housing inventories got too high because people extrapolated peak demand from 2020 and 2021. And what's happened is because of interest rates rising, mortgage rates have gone up the most in a kind of year-on-year rate of change in history. And inflation has ate into people's real earnings. People stop buying houses. Meanwhile, we've just made massive inventories of houses. The only way for that to clear is prices to come down. So prices are likely to come down. Look, it's not 2008. This is not an over-leveraged, massive bust. But house prices can be soggy for a while. But don't forget, they just went up like 25%. So if they pull back a bit, maybe house prices come down 10 to 15%. Net, you know, it's still up from where it was. But, you know, if you're looking at buying a house, you'll probably get it cheaper. But if you're looking at buying a house, you probably can't afford it right now because your mortgage has gone up and you're not earning as much money. So, you know, and also worry about unemployment. That will not help the housing market. So the housing market is going to cool off.
This one comes from George Lagadatris Jr. And the question is, why buy now if recession is certain?
Because the market's job is to forward look. If I can see the turn in the data already in liquidity conditions in February or March of next year, the market can too, even though most participants can't, which is why the market always confuses people. The market generally bottoms before a recession. It's normally 3 to 6 months. Sometimes it's been a year beforehand. Other times it's been in line with the economy. So my guess is the market has seen the low and it lies ahead. I short sharp recession. And therefore the market is already looking through, which is why the Eurodollar market's trying to price the turn of when the Fed have to start easing. My key takeaway is I think the economy falls very fast. I think that the asset markets have done pretty much a good job of pricing this in. I do not necessarily see another leg lower in equities, another leg lower in crypto. I think we're in that process where we're doing the retest, the head fake. I could be wrong. So I'm giving myself a 60% probability. I'm not like there's 100% probability, 60% probability or so. In crypto, I don't really care if it goes lower because I'll just buy more into this because as the liquidity cycle turns, we know how it works. I think the bond market is mispriced and yields will come down much faster than people expect. I think inflation will come down, unemployment will go up. I think the dollar continues higher for a bit and then starts weakening, and we'll have a corrective cycle that may last a year, 2 years, 3 years maybe, before we still keep going because we've got too much dollar debt. So every time the global economy slows down, you're playing musical chairs and the dollar screams higher because everyone's trying to pull the chairs away because they need the dollars. So I don't think that whole game is done. So that's kind of how I'm looking at this right now. I'm focused really on two key areas: crypto, which I've been allocating to because I really think we're at the turn. And I think Ethereum Merge is a bigger deal than people expect. And I think a lot of people have just been washed out again. Now, Tom DeMark tells me, he thinks that Bitcoin makes a new low at 17,000. Maybe that's right too. So, and I don't think ETH will confirm. I don't know, and I'm saying, to me, it doesn't really matter, but just people prepared. I'm not saying with all the certainty. It's what I think the balanced probabilities is. I think the same with equities as well. But for that really to be the case, I need to see bond yields come lower and the economic data come lower. So it's kind of really in the point where we should start to see things change and narratives change fast. That's what I'm really focused on. This next 2 months of economic data, if it's not a lot worse than expected, then every single, I produced in that GMI, you saw it's like 60 charts, all showing the same thing. I've never seen anything like this before. For them all to be wrong would be simply staggering.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.